Well, one of my homeboys, I'm from KZN, and there's not too many major listed companies in that part of the country, or part of that province of South Africa. But the big one in the capital of KZN is Hulamin, and the chief executive of Hulamin, Richard Jacob, is with us in studio, coming all the way up from that part of the world, I suppose, to the commercial center. Richard, your numbers are a bit confusing. If you look at the bottom line, it says that headline earnings were down 32%. Then you look at what the market is telling us about normalized headline earnings, in fact, being up like for like about 17%. I guess the real thing to look at is how did investors react to financial results you released today, and very positively.
Yes, thanks, Alec. The thing to look at, I think, in this set of results, and normally, is to kind of scrape away all the exceptional items, the abnormal items, and look at the operating profit before all those items. And we're actually at the best level of profitability since 2006 for the first half. So we're very pleased about the set of results. Obviously, it's a long slog and the turnaround continues. This is not the destination. This is just an interim place that we are in. And certainly, we're all quite pleased about the first half of this year, yes.
Yeah, best in 7 years, but you needed to turn it around at some point.
Definitely.
I look back on where you came from, 2008, the share price was over 20 Rand. It's done well this morning, up 5%, but you're still below 5 Rand.
Yeah. No, we certainly are on a journey now. You know, there's a number of issues we've still got to get right in the business, but the prospects are looking better. What is quite exciting is that we start commercial supply or commercial qualification with Nampak on beverage can stock next week.
What does that mean?
Look, you know, the Hulamin has, as we all know, has been a major exporter for many years, and therefore particularly vulnerable to the ebbs and flows of international markets. And as an exporter, just the same as we give preference to our local suppliers, so our customers internationally give preference to their local suppliers. So in developing the beverage can market, and it really does underpin a turnaround in terms of the balance of our sales, be they export or local. We're probably going to be at least 50-50 from 75-25 local export within the next 2 to 3 years.
Okay, let's just understand that. It's Nampak produces a lot of aluminium cans for cold drinks, for soft drinks.
Yeah, so
and you haven't been supplying them with
in fact, the market to date has been tin plate or steel cans. So Nampak are in the process of converting the market from tin plate to aluminium cans, and as that conversion takes place, so we will be growing our supply to them.
So that's a massive potential market opportunity for you.
Yes. Look, we have a contract in place with them for just about 50% of their business in the startup phase. We obviously will be looking to secure additional business post 2015, but even the volumes between now and 2015 are quite substantial.
So it'll make you less vulnerable to movements in the exchange rate?
Yes and no. I would say more protected against international markets. So you know, for example, when Europe, as it has been in the last couple of years, comes under pressure, we then have to run around globally and try and get additional sales in other markets. Now we've got contracted local supply. It does form a really solid base for the business. I think the other thing that's really quite critical...
Let's just go back there. If Nampak, then you say you're going to supply them 50% of their needs. If all goes
in the
well,
first 3 years.
Presumably thereafter, they might come to you as a sole supplier, or is that not a chance?
No, look, I mean, that's obviously up to them. We certainly aspire to be at least a 90% supplier to Nampak for aluminium can stock. It really makes sense from a recycling point of view. You know, the 50-50 between us and imports means that we can't actually use all the metal units initially to recycle back into can stock.
That's an interesting development, and I think one that perhaps people haven't taken fully into their calculations yet. Because at the moment, Hulamin is a bet on the Rand. Once you get your plant sorted out. And if the Rand falls, as has happened in this past financial period, then your profits go up from a big loss to a significant profit. Are you saying that into the future, it's going to be less of a Rand bet?
I think the Rand exposure of the business will remain. because remember that our selling prices are globally determined. While we may have a contract in the local market, these contracts are, our competition is international competition who price on the dollar. So prices are less volatile in the local market, but they are impacted by global exchange rates.
You've done some downsizing in this previous period, about 35 million that you are going to have to take into account for it. Mm-hmm. Is that in these numbers?
Yes, so what we've brought to book, we've made a provision for 35 million, which is a once-off cost taken in the first half of the year. The annual profit improvement, the annual savings and cost will be around 50 million. It's one of those unfortunate things that you have to do in this business climate.
In Pietermaritzburg, to lay off 140 people is quite severe.
It's very severe. It's been one of those things that we've tried to avoid for as long as possible. You'll notice from our reduction in headcount since 2010 that we've tried to do it by natural attrition. Unfortunately, it's got to a point in the first half of this year when that was just not fast enough.
Problem has, or if you like, the sword of Damocles that hangs over Hulamin is your relationship with BHP Billiton and the smelter at Hillside. What is do you have an update for us on that?
Yes, we continue to engage with them, and I must say we've had a very constructive discussions with them in the last period. I'm pleased to say that we've got another extension while the more substantive discussions continue. The concerns, of course, there are much broader. The country as a whole is worried that it's been ripped off by BHP Billiton. I suppose that those negotiations, whichever way they break, are going to affect you. Yes, look, we are kind of the pig with the bacon at stake here. BHP is our lifeline. I must say, the new management team that is in place, we've had very constructive discussions with them. And it really involves the beneficiation not only of aluminium but of electricity as well, which really needs to flow through the South African economy and unlock the growth and the potential. And there is so much potential in the aluminium industry here in South Africa. So we're really looking forward to a long-term sustainable arrangement on aluminium supply.
The problem, I guess, Richard, is that if the aluminium industry has been subsidized by excessively low electricity prices, and the rest of the country is now having to pay more normalized electricity prices, then does the aluminium industry, will it survive? I mean, you must have looked at these scenarios.
No, we certainly have looked at those scenarios. I think it's not really fair to say that these are subsidized electricity prices. At face...
What are they paying? I mean, do you know?
There's a formula that I don't know. It has been made available to some of the media houses. It's related to the related to the aluminium price. So in years gone by, BHP has paid way over the market for electricity. It happens that at the moment the price is undercut. But if you actually look at Eskom's results, Eskom are struggling to sell electricity. And Eskom's problem, as I understand it, is not baseline business. It's the peak hour. There's not enough electricity generation, and that's why you keep hearing these adverts on the radio and on TV to cut your usage between in the evenings and in the morning. And that's when the aluminium smelters can actually give an advantage to Eskom because they can cut back during those peak periods.
Let's hope that there's a rational solution to this, because the points that you're making, you don't want to destroy another industry. We do know that Rob Davies, the South African Trade and Industry Minister, has been working aggressively to build the manufacturing base. Have you had conversations with him, given that this is such a critical
we certainly are very engaged with DTI at all levels, as well as a number of other government stakeholders. And we're working very cooperatively with government. There are a number of programs. You'll see also in this some of our results and some of the work that we're working on is unlocking piped gas supply into Pietermaritzburg, and that's more of a Department of Energy equation. But Maritzburg sits off the gas pipeline, and Hulamin is the biggest consumer of LP gas in the country. So there's engagement and cooperation with government at multiple levels.
Richard, just to close off with, these are numbers, as you say, the best in 7 years since 2006. Are they sustainable for the second half of the financial year? Is a brighter dawn awaiting Hulamin shareholders?
Yeah, look, I'd much rather be known as the CEO that under promises and over delivers. So I'm not going to issue, a hugely positive. Certainly, if things stay as they are, we would like to at least repeat the first half performance in the second half.